Hey everyone, this is Brian with Copycat Trading. Today is Friday, January the 5th, 2024, and I'm going to give you a daily video on the update. At least maybe once a week, we'll see how it goes, see how much interest is in it. But this is going to be kind of an update video of what happened during the day. Today, the focus was on the jobs data. When we first came out, looks like the market does not know what to do with the information. At first, the market moved up and then it moved back down. The jobs were 170,000, but they were expecting 170,000, but they got 216,000 created. The unemployment rate was expected to be 3.8%, and instead it was at 3.7%. Now, sometimes the market can see good news as bad news, because the reason why the market wants the bad news is because then the Fed will cut rates, and they're pricing in, the market is pricing in multiple rate cuts this year. So if the news turns out to be good, then there is not going to be as many rate cuts, and so then all the rate cuts that are expected are going to bring the market that are not going to happen are going to bring the market down. So the market at the beginning was strong, and then nobody kind of knew what to do, and then the market fell. And so we'll take a look at how things look today. So this is the chart of the spiders, and of course I'm using TradingView at this point. And TradingView just got superior charts. I've got my daily chart on one side, my weekly chart on the other side. I've got simple moving averages. I use simple moving averages on everything. So 20, 50, and 200 simple moving average. As you can see, the 20 moving average, the spiders have cut through it on the daily. And this is the RSI down here and the volume trends. But you can see as the RSI, we were severely overbought. When we were up in this area, we went up even higher, and now we've come out of that severe overbought region. And so now we're back down here around the midpoint of the RSI, which is looking better. We had a small update. We had a 0.14% update on the spiders, so not very much of an update. This is what it kind of looked like in the interim time. In the middle of the day, right in here is where we started at this bar right here. The market initially kind of sat there, then it began to creep up, then it really took a rocket ship up, kind of stayed in this region. As you can see, it kind of made a weird looking inside bar here, but then that failed and it came back down into the lows, even past the lows of the day, and then crept back up right to this trend line, and then fell back down again, and then right at the end of the day came up and hit that trend line. Right now in the post market, we're just barely right at the trend line right there, so that's where we're sitting at post market. So during the day, as far as the day goes, our market tried to digest the information a little bit of what this meant for the market. And I think that the sellers are going to overwhelm the buyers in this particular regard. However, we have had several down days in the market, and so we may get a short-term bounce. And the bounce may be go up to the higher levels. At this point in time, there has nothing in the volume trends that have shown us that this is going to be a reversal in the market and that this is permanent and that this is going down. But if we do go down, then we're going to have a target probably right in here, this high pivot right in here. And so I'll draw a trend line right there. That'll probably be the target if we go down, and probably take a short-term bounce off of this. And then who knows how high that'll go, probably a good fib retrace, and then it'll head back down probably again. If we look at the markets and what they have done by making these shapes in the past, the market is probably going to go into a complacency stage, which is where we're at now, and then it's going to roll over big time. We don't know what the cause of that is going to be, but just the market usually, whenever it makes these great big giant bull runs like it did back in 2021, and then coming in for this correction in 2022, and then comes up for 2023, this is usually a complacency stage, and then that follows a severe downturn, and we don't know what that's going to be, but it could be a pretty massive correction. But we are technicians, or I am a technician, and so therefore I will just follow the chart day by day. So I'm not like severely short the market. I do have shorts on the market right now, but I'm not severely short on the market. We're technicians, and so therefore we're just going to take one day at a time and go with what the chart tells us to go with. So at this point in time, we're waiting to see what happens. Again, it'd be my guess that we're probably going to get bounced in the next couple of days in the spiders. So that's what we kind of look like. It looks like the volume today is going to wind up being about 85 million, which is pretty good volume for the spiders. At least it's not low like 50 million, but it's not above 100 million either, which is really a definitive point for technicians. All right, here's your QQQ chart. Let me get rid of some of these drawings. And the QQQ chart, as you can see, has gone straight through the 20 moving average and is kind of sitting right in between here, the 50 moving average. And the volume on it is pretty typical. It's pretty average. It's not anything high, not anything low. So we've come out of the severe overbought position as well in the QQQ as well. Had about the same exact pattern that we had with the spiders. We've had 0.12% is the up day on the QQQ. So nothing convincing, but it had the same confusion dealing with that strong jobs data throughout the day. As far as the Russell goes, it is down 0.29%. And of course, the Russell has been the strong leader over the last few weeks. And so it's actually got into those severe overbought stages, just now coming out of that severe overbought stage. You can see the RSI here, which is telling you above this line here, 70, that we're severely overbought. So we're coming back down. We're about to a neutral place now, but it has fallen precipitously as it come through. And it cut through the 20 SMA like a hot knife through butter. So it's down again today, and it will probably catch a bid whenever the spiders catch a bid. But at this point in time, the IWM or the Russell is just not looking real strong. As far as gold goes, gold has got a place where it can break out above its all-time highs, but it just hasn't made it there yet. But the all-time highs are sitting right in here, I believe, somewhere in this point, and I'll have to get a better reading on it over the next couple of days. But sitting right in this plate, right in this area, and I got some other trend lines here. Let me see if I can clear some of this stuff up. But it tried to break out just a few days ago. It didn't quite make it. It punctured through the high, and then it was rejected and came back down. And you just never know. Gold could go up and retrace down here real small and then make a real big surge through these highs, or it very well could break down and have another correction. But I think that's probably a correction that'll be worth buying. I think it's a correction that probably will be a buying opportunity for many years to come. If you look at the gold chart on the weekly, it's a little bit easier to see over here on the left-hand screen. I'll bring it over just a little bit. But there is a head and shoulders pattern that has formed here. And of course, it has not triggered, no close above the all-time highs and above the neckline. But it is a head and shoulders pattern that is occurring here on the weekly chart. And if that occurs, if it goes up, man, you've got quite a bit of distance to go up on the gold chart, but it hasn't triggered yet. That's an inverse, excuse me, if I said head and shoulders, I meant inverse head and shoulders pattern. And so there's an inverse head and shoulders pattern forming on the gold, so that could be good news for all the gold bugs. But at this point in time, just according to the short-term version of this, it went up and it approached its all-time high, and it got rejected immediately. So that's not a good thing for gold. But it could go up a little bit further. Silver, there's not near as many convincing things on silver as what there is on gold. It's kind of making this wedge pattern here. And if we take this line, let me adjust this line just a little bit. Take this line and bring it up here a little bit. We got this wedge pattern that's occurring. We got the lows down here and the highs up here, and it's kind of bouncing back and forth between those two. A wedge pattern that looks like this is neutral. It's 50-50. You just don't know which direction it's going to go. I would imagine if gold does break up, that silver will break up as well. Otherwise, silver might break down. If it does break down and gets back down here below this pivot around $20.70, it'll probably be a very big buying opportunity for many years to come. So you just might want to keep that on your radar. Natural gas. Natural gas took a good jump today, initially after the bounce yesterday, after the going up yesterday. Get rid of some of these lines here. After natural gas took that big jump yesterday, and then today when it first opened up, it really took a big dip, and then it bounced right back up, which is showing relative strength. So it shows that there's buyers in there trying to buy up natural gas. And so I would venture to say there's a lot of resistance in this general area right in here. You can see all these pivots that are coming down here. And I would say there's pretty good resistance right in there. Let me get some of these, and it'll be a little easier to read. But if it comes back down to these areas right in here, I would say that that's probably a buying opportunity down here. At least that's where I would be buying if we did a retrace down here. Otherwise, whenever it broke out at this place right here and rocket shipped up, you can see it's running into resistance here. If it continues on, that means you got some really strong buying. I would imagine it probably is not going to make it too much higher. Maybe to $3 would be about the max move to these high pivots right in here. But max move before it starts to come back and retrace. But if it retraced down to this scene of the crime here, or this scene of the area here, then I probably would buy it as well. Oil, if we take a look at oil, oil has broken above this downsloping trend line here, which is big for oil. And you can see there's several points of resistance that it's got to get through before it goes up. But it could, notice it's making higher lows. It could very well make some pretty good headway up, maybe to $80, probably this high pivot right in here. And make some good moves up to $80 before it rolls over and comes back down or goes up. Oil is just so hard to predict these days because of the fundamental analysis that's going on in the Middle East and across the world. All right, lastly but not least, of course, is Bitcoin, and Bitcoin is kind of in a range here. And if we just kind of take our trend line and just put from here to here, and another one from here across, Bitcoin has just been stuck in that range now for quite a while, and it's just making a flag pattern. And we don't know which way it's going to go. Usually upsloping wedges tend to break down, but I don't know what's going to happen. Of course, there's a rumor of a Bitcoin ETF about to be approved. They were thinking it was going to be approved today by close, and it doesn't look like that has happened, but it's been rumored for the last week that it's going to be approved. And if it does get approved, it'll probably have a pretty sharp spike, but there could be also a sell the news event if that occurs. Anyway, that is it for Copycat Trading for today, and I am going to sign off, and I'll be looking forward to making some more trades and bringing those to you guys. Talk to you soon.